would be last for a year?
That's right. QE1 basically lasted about a
right?
year. QE2 lasted about 6 months in terms of the
What
effect.
about QE3?
Well, I think the fact that they're doing it every month is some kind of an attempt to counteract that they think they can. If they keep, pumping the money in forever, it's going to keep having an effect. But, that doesn't really make sense to me because we still have the twist. The twist is still an ongoing program for the rest of this year. So there's still, I think it's 40 billion going out every single month in terms of the twist every month. If that's not working, then just effectively increasing that amount, doubling that amount, I don't see that's going to be a massive game changer in the long term. Yes, it may help in the short term, but when we get to December, then we're only in the same situation that we are now because the twist money stops in December. So we go back down to the same levels we are now. And if we look at, all the economic data coming through now, it's not working. So I don't really think this is going to make any kind of an impact that goes beyond Q1 next year.
In practical way, it's like they're gonna inject the money, $40 billion per month, every single month until the economy gets better.
That's what they say. Yeah.
So in reality, where the money come from?
Well, this is quantitative easing. This is new money, and this is being created.
So just print the money.
Just printing money, exactly. And there's then a whole bunch of other issues surrounding that, which is that after the presidential election, we have to get a new fiscal policy in the States. Everybody's talking about the fiscal cliff or the tax cut expiries. But not only do we have the fiscal cliff, we also have the fact that the debt ceiling is going to be reached again. You remember we had that problem last year? Well, we're going to get to the debt ceiling again. So actually just spending that money now and promising to keep spending that money every month, it doesn't really change those problems. So if we do get to that stage, if we increase the debt ceiling, I'm just not sure that anything really has changed in the landscape, except Bernanke has promised that they'll keep doing more of what they're doing already, and they'll keep doing it, out past the end of this year, whereas they were supposed to stop it then when the twist expired. So, as I say, I don't really think this makes a great difference to anything that we're expecting in terms of economic outcomes.
But every time that central banks, print the money, they would see the higher inflation rate all around the world. So, but the Fed wants to, keep the interest rate 0 to 0.25%. Is it like contradicting policy?
I suppose it is to some extent, but the real problem wasn't inflation in the States when we had QE1 and when we had QE2. Really, that inflation was exported to developing markets. So, I think we actually felt it here in Thailand.
Oh, yeah, sure.
Far worse. You remember the price of food oil going up. Exactly, things were going up every single day. So, I think it was more of a problem for emerging markets. That might not be such an issue this time because of the fact that there's this attempt to contain where the funds can actually flow to by keeping it within the US mortgage market. But having said that, it's very difficult. One of the lessons that doesn't seem to have been learned is it's very difficult, if not impossible, to make capital flow exactly where you want it to. So you can go and put that 40 billion into the mortgage market, but it doesn't necessarily have to stay there. You can't necessarily force people to buy houses with it. Capital tends to leak over the sides, and it tends to go wherever it thinks it can get the best returns. So we may well see some of those flows eventually end up in emerging markets. We may well see it, recreating inflation here in Thailand. I actually don't think the Fed are worrying too much about that right now. I think their only concern is that America is still in a deflationary environment. One of the things that Ben Bernanke has always said, and this goes back 10 years now, is that you can prevent deflation happening by printing huge amounts of money. He said there's a technology called the printing press. We can just print huge amounts of money and we can threaten to drop it from helicopters. That will make money worthless. That'll force people to spend. That'll stop deflation happening. Well, it's kind of maybe in some ways it's a cute idea, but it's something that's never actually worked. And I don't think there's any sign of it working this time. I think, threatening to devalue US money, if you do that to an extreme extent, you end up like Zimbabwe with 1 million% inflation. But I'm sure they're going to stop before they get to that level. So I think unless they were really prepared to completely trash the US dollar, which wouldn't make any sense for them, then I don't think they're going to carry on enough of this QE, enough of this money creation to really force an inflationary problem in the States. I think the inflationary problems will come more in developing markets and more in places like Thailand. And it's kind of possibly a little bit of an irresponsible global policy that it caused the problems that it did. And if you look at the socio-economic problems that we had with the Arab Spring and all the riots, that was really a direct effect of QE1. So there's a real risk again that what this might do